Very much, Paul. I really appreciate your help and support, and of course your introductions are wonderful. I'm going to dive right into some work here, and if I go too fast for anyone, use the Q&A box to let me know that I need to go back over something, and I'll catch it when I can. I am using a very large monitor at the moment, so what's happening is that I'm just going to kind of focus on the left side of that monitor because that way you guys can see everything that I'm doing without scrolling back and forth. I'm going to start off. I'm sure that many of you have seen this before, especially if you've watched my webinars or seen my fib work in general. But I like to start off just to make sure we're all on the same page with a review of where the levels land and what they mean, essentially. Okay, so let's do that, and then we're going to go into several different securities like crude and gold and S&P cash, this one, the Russell, etc. Chart is too small? Okay, well, if I make it larger, can you see the whole thing? Okay, maybe that's better. And I'm going to zoom in on the most recent swing anyway. I just did want to point out, turn on the pointer so I can point out. I did this in a previous webinar. I showed how last year's high actually was a target extension. Okay, that means high to low times 1272 projected upward. That was really, really perfect. Okay, but let me take that off here. And we'll go to the current stuff because I really want to talk about the various retracements. And again, this might be a little bit boring for some folks because I see several people here who have been through this before, but some people said they wanted a review anyway. You see that highlighted red bar? That's telling me where I am selecting a low. And really all I want to do at this point is take that low, in other words, select that low, and go to the highest high afterwards. This is going to get a lot more interesting real quickly, but I just want to show you where this stuff, lands and what it means. We have the 236 level. This program says 23.6, but to me it's 0.236. It's the same idea, it's just putting the decimal in a different spot. 236, this is kind of interesting. 236 is a very extended, in other words, in the case of support, it's a very overbought level. If we were to pull back to that level, I'm not sure I'd expect to see it hold. It's not one of the strongest levels. 382 is a much stronger level, especially if it has not been broken before from the low to the high. 382 is a very, very powerful level. 50% is half and half. Some securities react more to the 50% than others do. For example, S&P is not particularly resonant with the 50%. The bond is, okay, the 30-year bond. Euro will react to a 50% level. Now, 618 is the one that everyone tends to focus on. They say, you know what, if it pulls back to the 618, it's going to bounce. First of all, I don't believe in focusing on a particular level and saying it's going to react there. You'll see that time and time again on various forums, all over the place, really. Why doesn't, how do I know which level is going to hold and which level is not going to hold? Well, you don't. What you do is you look at the level being hit, and then you use some sort of momentum indicator with a very clearly defined trigger to tell you that it's going to hold. The fib level tells you where. The indicator that you're using, for me that's CCI, tells you that it is holding. But you don't just take a buy, for example, you don't just take a long because it hit a certain level. You're definitely going to not do well that way. My favorite level is the 786, 78.6% of the move upward. Why is that my favorite? Because if it breaks, you're going to head for the target extension in the other direction. So how is that helpful? Well, it tells you, first of all, let's say you come down to the 786 and you don't get anything that looks like a buy trigger. If it breaks, you know the pattern has shifted. We're no longer dealing with higher highs and higher lows. We're going to aim for a target that's below this prior swing low. I hope you guys can see my pointer. And so you're implying a pattern shift, and you generally, once that 786 breaks, you generally have a nice, smooth run to that target in the other direction. Let's see if we have any examples of that. Actually, I just want to do the price projection first. The other main tool we use, price tool, is the price projection. These are retracements, and the target is a target extension, but we also take prior corrective moves within the rally. In this case, rally because we're in an uptrend. So here, for example, high to low projected from the highest high after. Okay, now that 236 is a little bit more powerful because it is almost overlapping that price projection. Okay? This is what you really want to see, these kinds of overlaps. And all I'm doing when you see the line getting bold is making it bold, emphasizing it to remind us that if this were to start to drop immediately, these are the strongest levels to look for. And so in other words, if you guys understand what I'm doing with the price projection, great. If you don't, please let me know. High to low. The difference in how they're drawn is that the retracements are 2 points. This whole retracement series is low to the highest high after. The price projections have 3 points, high to low, from the highest high after. Okay, there's a nice big swing, so I'm going to emphasize that one too. Okay, I see a comment that I'm breaking up big time. Anyone else having that problem? Because if it's not, if I'm not breaking up for everyone, it's not on my end. All right, so let's take a look at the idea of the 786 breaking. Okay. Sorry, Steve, that's on your end. We can take this swing, high to low, and see, I think this is very interesting because what happened was we hit the 786. Did you see where I put if you didn't see where I drew that, let me know. High to low. The idea being to find the main resistance, and here it was, 1264. And you see it did pull back from it. It did indeed pull back from it. But again, this is a good opportunity for, if I'm going too fast, let me know. If we take the low to high in this swing, you'll see that we did, oops, it automatically updated. That's what this program does. When we pulled back, we didn't break the opposing 786 to downside. Okay, so the emphasis was still on upside, and sure enough, when we finally broke the res, we zipped up to the 1272 target extension. There's another extension beyond that, 1618. That's the second extension. The difference being that the initial target, 1272, is the one that pulls price once the 786 resistance is broken. Okay? So my main goal here was to show you how these levels are drawn.